All right, in this video, we're going to talk about who can invest. There's this thing called accredited investors and non-accredited investors. What is that? What am I? What does that even mean? And how does that affect the SEC regulations? What is typically the minimum to invest, and how much should I invest in a deal? So it's really about who can invest and how much. Let's get right into the teaching. There are two types of investors. There's the accredited investor, all right, and there's a non-accredited / sophisticated investors. You may have heard that. What are each of those? So an accredited investor is an individual earning more than $200,000 a year or a joint income of $300,000 in the last 2 years with the expectation to reasonably maintain the same level moving forward. And you have to have a net worth exceeding $1 million, either individually or jointly with a spouse, and you can't include the equity in your property for that. So that's the definition of an accredited investor. And then a non-accredited investor, obviously anyone who does not satisfy that. Now within that non-accredited investors, the SEC talks about something called a sophisticated investor. The sophisticated investor is someone who has previous investments in anything outside the stock market. They may have taken classes or seminars in alternative investments. And most importantly, they have to have a pre-existing relationship with a sponsor. So if we're the sponsor, we have to know who you are first. So this is important for you to know as an accredited investor. The SEC basically says, hey, look, you have a lot of money. If you invest this money, you probably won't lose your house, your car, your shirt, okay? Now, on the other hand, the non-accredited investor, the SEC tries to protect them a lot more. So there's laws around taking investments from non-accredited investors. So from our perspective, if you are of the non-accredited variety, we have to know you first. So when you register with the Nighthawk investor portal, for example, what happens is you fill out a questionnaire. We want to get to know you a little bit better. You fill out a questionnaire. Then you schedule a call with us. We want to again ask you some questions about your experience, what you're looking for, tell you a little bit more about Nighthawk and kind of what we're doing, get to know each other a little bit. I might send you some emails, maybe educating you about certain topics or things of that nature, maybe doing a training webinar, or maybe we do a property tour. And at some point then, we've decided, hey, we now have a prior relationship, and after that point, I can now present you with a live deal, but not before then. Now, again, if you're the accredited investor, it's like the Wild West, right? We say, hey, my name's Frank, my name's Michael, here's a deal, right? As long as you tell me that you're an accredited investor. Now, there's two different kinds of SEC type exemptions you can file. There's something called a 506B and something called a 506C. Now, we typically, as well as other syndicators, typically file 506B. This means various things. That means that we can take money from accredited investors. We can also take money from up to 35 non-accredited investors who are known to us and or sophisticated investors. But it also means that we can't advertise. I can't go on Facebook or on LinkedIn or a billboard and say, I got this great deal, sign up now. Okay, I can't do that. So it has to be very targeted to accredited investors or people who I already know. And most syndications are done under this exemption of 506B. Now, 506C is a little bit different. 506C means that I'm going only after accredited investors, and I can market to accredited investors. And there's some disagreement whether I can put up a billboard because I'm not really marketing to accredited investors. But for example, if I buy a list of doctors or dentists or things of that nature, or I have a luncheon where I'm inviting high net worth individuals, I can now pitch a deal without having known them first. Okay, so that's really the difference. That's really the difference between the two. All right, so the other question is people always have, okay, now I know if I can invest under what's typically the minimum, all right? What's typically the minimum and how much should I invest in each deal? So the minimum really varies by the operator and by the deal itself. Typically, the larger the deal, because of the 506B limitation of 35 non-accredited investors, of a 506B, the minimum investment is going to be higher, typically about $100,000. All right. Now, our minimums are typically between $50,000 and $100,000. It's rare that you'll find minimum investments under $50,000. It's unusual. Sometimes there are different returns if you invest more, for example. So that leads us to the next question: how much should I invest in a deal? So my rule of thumb, and this is that you don't invest all your money in a single deal unless you have invested with an operator before and you're very comfortable with them. So as you're first starting out and you're feeling people out, whether you're investing with us or somebody else, typically people will invest a minimum. and they'll let a couple of quarters go by and see how the cash flow distributions go, how the project's going, what the communication is like. And at that point, they may decide to go deep with one or two operators. The nice thing about all this is you don't need to work with a dozen different operators, okay? You just need one or two and just go deep with them. That's a great thing. So spread out your investment over multiple properties, maybe over one or two different operators is typically the way to go. So that's really it in a nutshell. Who can invest, accredited, non-accredited, 506B versus C, and then how much can I invest depends on the minimum. And then I would say rotate your investment among until you get comfortable with an operator. And then if you have more to invest in at that point, go deep with that operator. So hope you found that useful, and hope that helps you make better investment decisions.